Live, ladies and gentlemen. Bitcoin's currently at 8,900 and just broke 9,000 now. Thought it was an exciting time to jump online just to bring it back to the good old days. Again, I was reading through Nassim Taleb's book, and one of the things he said is people very rarely notice that they're actually partaking in history, and it's one of those monumental nights. I figured we should be online for it. As with all things, history takes place right now in the present, so let's just dive right in. Boom. So that's pretty exciting. I think most of this evening's show is just going to be about kind of hanging out together and I guess reminiscing in the past. I've posted 3 videos today, one of which was a vlog, another which was some editing work I had not yet to share. Oh, there we go. And let's make sure we're watching the charts instead of Dizzy Gillespie. But I wanted to make sure that we go over this stuff together. You know, the book I've been reading is so fantastic. It's really hard to, I think everyone should read Fooled by Randomness, especially if you're interested in being a trader or I guess in any having exposure to risk, which is all of us. We all live in a risk-adjusted world, and I think taking into account the fact that outliers don't just exist, they are significantly more frequent than we would have imagined. So here we go with Bitcoin right now is currently at $9,014. It's been jumping up for the last hour or two. It was actually one of the reasons why we thought jumping on and doing a live stream would be something kind of like a history keeping track of. And it's a little late here too, so I may come across a little bit more befuddled than usual, but I think what I wanted to do was really share these monumentous moments with one another. We're going to dive into the charts. We'll take a look at any of the tokens you guys are interested in. And I guess what we'll kind of just do in the background is watch Bitcoin do its thing. Now, to do that, I want to go over a few things. In the back of the private bear den, there's a few of us that we were looking at the weekly chart on logarithmic for Bitcoin. And I want to share that now. There's a trend line that they were drawing. Let's see how much history we have. 2015. That is not enough data. Bitcoin, let's see, here we go. This goes back to 2013, a little bit better, but still not all of the data. Enough that we can draw a trend line through it though. There was a really nice trend line that was coming up. What was it? Was this the line? Where was the bottom of the trend line? It would really help to have the rest of the data. Anyways, we'll kind of skip over this part. Either way, the assertion is looking the same. This candle here, this tweezer pattern that just took place on the weekly, this is extremely bullish. It's very likely we're going to jump to $11,000 quite quickly to the top of the cloud now. This is, I think they call it an absorption candle on absorption candles trading. Let's take a look here. Exhaustion candles, no. The absorption pattern, here we go. Technical it's on Meta 4 Trader. This is going to be garbage. Anyways, basically what this is that every little bit of sell was actually eaten up by buy, even though considering the buy volume is actually lower than the sell volume. Now, we didn't see much selling all the way from April, at least on the weekly. We saw the last week, 2 weeks of between May and the second week of June here. For a sell candle, but in between there was no real selling volume that took place. And so now that we've seen a complete chewing up of everything that had been sold quite rapidly, this looks to me like a tweezer pattern. You have the candle wick just slightly lower than the candle wick over here, and the volume body's almost identical. This could be very bullish, and again, probably close to the $11,000 mark would be the first aim. Now, this is where we start to get into really heavy lines of conjecture. You know, Bitcoin has followed a linear pattern in its growth for quite some time. So for those of you that are asking, we will definitely look at Litecoin. We'll look at a few of the other tokens and pretty much anyone you guys ask about. We'll go over some of the stuff that you're watching in the private bear den. But what I want to, what I want to go over here, first off, is the potentiality in Bitcoin. Now, for those of you that have listened to the channel for a long time, you know that we sit by the same sentiments. Bitcoin could go to $10 million or it could go to zero. Those are the asymmetric bets that we're looking at placing. Obviously, the rest of the things that happen in the world around that is one of the reasons why I think reading the book Fooled by Randomness is so important, especially for not just for traders, but anyone trying to understand cause and effect, and then the relationship of things that have nothing to do with you, and how to be prepared for that type of randomness. Because there are lots of things in life where you actually may end up looking smarter than you are, mostly by luck. And that's not really how you want to operate business or trading. I think that's one of the reasons why we got a lot of flack when we put $1,200 Bitcoin on the target map, is because we've been in this game for a while. We know that there's these outlier possibilities and we want to be prepared for them. We were prepared for it to go to the upside. Sure, we could have grabbed more when it was at $3,000 or $4,000, but this is unimportant. Any good trade strategy or an investment really is about removing those emotions and coming to a sound basis of what can we do to grow our portfolios and make sure that we don't get, as the now newbies call it, wrecked, or I guess in some way killed. Depending on either way you look at it, none of those things would be beneficial. So on the weekly, we're actually looking quite bullish. And again, it still would bring us up to that $11,000 sentiment we had looked at before. Now, when we were on the hourly chart, there was the potential for the breakdown, and we were looking at it's kind of strange here, and you don't... So we've been chatting in the private bear den with a few other people that have been trading for quite some time. And one of the conversations that we were having was the potential of this being kind of like a cup and handle. Now, in the regular stock market, you only have 5 days a week of trading, and only 8 hours a day of that are actually available for trading hours. So in the new crypto markets, we have 2 extra days and an extra 14 hours, actually more than that, 16 hours out of each side of the day that normally weren't tradable. So part of the question is, is there a potential to have a cup and a handle like formation on a smaller time frame? It would actually also, if you, for those of you know that about the cup and handles we've measured in the past, they're almost exactly the same length. So we would have a 15% gain from the bottom of the cup, which would a 15% gain would take us to around $10,000. So it's not too far away from the top of the cloud on the weekly either. So part of the question is, when we're looking at a new ecosystem like this, right? This is a growing and developing space. Some of the old trade signals and patterns might actually be accelerated. It's very possible that you can see a cup and handle, I think, on these lower time frames, which we didn't used to have. And the reason this is important is because as every ecosystem grows, what was once a reliable pattern now becomes unreliable. So I think it's important to keep an eye on stuff like this, because we may actually see a cup and handle type extension here. But even on, I think, a more noticeable pattern, which we just broke to the upside of, although not currently out of the range yet, was actually an ascending triangle. So we see here that there could be the potential of an ascending triangle. This is generally a continuation pattern, although it does not have to be. You could actually even put probably a little bit lower line of a trend coming right through the center here. You could have actually, depending on how you look at this triangle, you could say that we've actually already broken out of it. We could consider this, I guess, like a little bit of a buffer band. Again, when we're looking at pattern recognition, I don't think it's any... A lot of the times it's not as valuable to be like, oh, this pattern is going to do exactly this thing. So one of you guys asked about the cup and handle on the weekly, and this is one of the things that I thought was funny too, and we actually did discuss this in the private bear den with the group the other day, so I will look at that to ascertain this question as well. And we made the joke here too that perhaps it wasn't a cup and handle, but a skillet, a skillet-like breakout. A handle and skillet. Let's remove this ADIX here a little lower, so this looks a little more prominent. So we're also joking that this could have been what we're calling a handle and skillet, and this is a potential too. It's not. Generally, I would prefer to see a much more defined cup and handle. But again, when we're in a new market like this, Bitcoin's only really 8 to 9 years old now. It's a toddler. It's still going to do things that are unexpected to us. So we have to, kind of get more used to those unexpected outliers. Again, this is why I've said it almost, this is going to be the third time I say it this show and multiple times today, is read the book Fooled by Randomness by Nassim Taleb. It is brilliant. And I think it also is meant for the more mature trader that realizes a big part of this game is making sure you stick around. A lot of traders don't stick around. A lot of investors don't stick around. They don't usually make it through an entire cycle. Even if they happen to make millions once, they can lose it all very quickly because they've never had to manage that type of wealth before. So this right now, again, just to recap really quickly, this upwards candle on the weekly that we saw breaking above, it looks like a tweezers pattern, and it also is a form of absorption, which means on this single bar of sell we bought up everything. Everything got chewed up quite quickly. And we'd actually just, so as you can see here too, we went very strongly bullish around 6,900 on, at least on the weekly, upwards of around 11,000. Once we hit the top of this, the cloud, we start to enter no man's land. And the reason we start to enter no man's land here is because there's a real definitive question in my mind, and I've mentioned this a few times before. Aside from, there's still a lot of potential for downside here, obviously, right? Let's just talk about upside potential right now, because they're both always on the table. Outliers of both extremely high Bitcoin price of $10 million and low prices of $1,000 are still very possible. Now, the length of the time frame that it takes to get there, it doesn't really matter. I just try to look them from like a probabilistic thinking. That way I can assess risk. And I do this with everything in life now. This isn't just about Bitcoin. I think this is a much larger philosophy in life to how to make sure you get to the next stage, right? If you can afford to lose a little bit every day, and then on that once a month, you make 10 times, 50 times more than you lost throughout those small little bleeds, then you're winning. So probability on a longer term outlook is actually significantly more successful. For instance, the guy that wins the lottery all of a sudden compared to the guy who's been a dentist for the last 20 years, again, this is pretty much straight out of Nassim's book, is going to have a much better odds of reaching the top of that mountain and staying there. Again, so part of this is a much more conceptual version of understanding why risk adjustment and probabilities in any form of wealth acquisition, accumulation, is important, because it's not just about, oh, I've got it once. It's how do you keep it? I think that's one of the other funny quotes is like, oh, if you got the big house, the nice car, it's like, well, everyone can get it. It's keeping it that's the hard part. Anyways, that's a whole other side point. So let's zoom in. I'm going to take a bit more conjecture at Bitcoin's price here on the smaller time frames. Again, because we are looking fairly bullish on the weekly time frame. Let's kind of go down through the daily and hit out from there. So on the daily, we can see we've actually pulled off volume higher than any of the previous candlesticks we did before, which actually as you can see just on the very bottom of this candle here, this bottom of the candlestick here was the previous tops of the volume on the daily here. Again, very bullish sign. What's important again here is just looking for the indicators. When we saw a drop down, I don't risk adjust for Bitcoin's price movement downwards because I don't jump into stable coins. I did once or twice in the move back here, which actually turned out profitable, but it just didn't feel right. I hadn't really done that with Bitcoin before, and the only times I'm going to do it with Bitcoin again is when we see extreme tops and massive peaking, like we did at $20,000, which is also still very much so on the table for where we're at today. I think there's a lot of exuberance in the markets. There's, Grayscale's buying 10,000 Bitcoin a month. And one of the downsides to this is that, okay, well, how many active Bitcoin wallets are there? 32 million Bitcoin wallets. Okay, so let's see. We've got around 7 billion people on the planet. Let's just do some rough math here. 7 billion people on the planet. 700 million. It won't even let me do 7 billion. So let's go 900. God damn it. Stupid Mac calculator won't let me go that high. Anyways, the point of this story, it's not a very high percentage point. If there's 32 million Bitcoin wallets, you would need at least 150 million to be a percentile of the population. So we're not even at a percentile. We're actually at probably 0.5% of the world's population has a Bitcoin wallet. Now, how many of these wallets haven't been used? They've been lost. Statistically speaking, it kind of makes one of the abstract things about Bitcoin, again, it pushes it more into the store of value as a money. And I think that's very valuable, but it also brings a very large argument to some of the reasons why I also am invested in Digibyte, also why I'm invested in Flow, Raven, and a few others, Litecoin being in that list, but in a different variation of it. As you can see here, we are going to go over to the Litecoin chart, as we did see a very, very sharp return from that, and a denial of the top of the handle here. Now, I will get into Litecoin a little further, but I just want to finish my conjecture here with Bitcoin, because I do believe it is going to drastically affect the price of Litecoin. So Bitcoin right now on the weekly has the upside potential to bring us to $11,000 to the top of the cloud here quite quickly. On the daily right now, we've actually been riding above the cloud since we broke out here at $3,900. We have been above the cloud on the daily on Bitcoin the whole time since $4,000. That's actually very wow, that's impressive. The fact that I hadn't looked at that yet is astonishing to me. As we zoom down the time frames again, we start to see where some of the weakness did take place. We broke through the cloud here for the first time at any large basis to really test the first simple moving average here. I believe it was the 200. Yeah, we've got our 200 and our 314. 314 is the blue and 200 is the top green here. So again, when we came down to test this line, there was actually a real strong indicator that we might go down further. Again, we see the NVT, the MFI are all maxed out right now, more than they have been before. There's a lot of bulls, sorry, not bulls, but people that have been in the ecosystem for a long time trading that are going, whoa, what the hell is taking place? But as you can see, the NVT actually dropped almost all the way to the bottom of its box. And here, I'll open this up so it's a little clearer. We dropped all the way to the bottom of the box, almost broke down, and then again moved above the moving average of the NVT here. So again, since we broke out in April 2nd, yeah, that's about right. Yeah, since we started the breakout around April 2nd, we've been maxed out in the NFT and I believe the MFI. So if I close this here, we'll remove this. And the money, that's the money flow index. It basically shows funds coming in and out of Bitcoin's price. Let's get this one out of here. Get rid of this. So, hey, while we're at this, remember to give us those thumbs up if you like this channel and you appreciate the content. Please do remember to subscribe. It is very eclectic. We go through all sorts of things here. Earlier, I posted a video of just a beautiful woman dancing because I like vlogging and doing video edits. Sometimes I rant about who knows, all sorts of stuff. So if you're new to the channel, it's not always just me charting. I do go kind of all over the place. This is a creative outlet for me. The Arcane Bear is supposed to be that way, so I am really appreciative for all of your guys' support. When you do give us those thumbs up, it also helps the live stream grow. I have been taking time off of doing live streams and videos every day, and it's quite noticeable that YouTube's algorithms definitely ding you for not. Anyway, so to end off the conjecture here, the fact that we bounced below and we couldn't close below the 200 simple moving average is very, very bullish again too. So it looks like that next target of around 11,000 is going to be what kicks us into the plate next. I'm really, I sit in the same line as a few other people. So for those of you that are on TradingView, please do give us a follow. We do leave some of our ideas and our scripts here. For all the scripts that we're using on the chart right now, we've got the Bear Claw, we've got the Eagle's Nest, we have the Eagle's Crossing. You can download these all for free. Remember to give us a thumbs up and like these. Follow us on TradingView as well. But there are actually someone else, Bill Charleston. Anyways, I'm going to show you someone else that I follow here on TradingView. Magic Poop Can is actually great too, but I want to go over yeah, Bill Charleston stuff. He's got some great articles, but a lot of the guys that have been in the game for a long time are actually sitting very bearish, right? This was one day ago short post that they had placed, and obviously it did not break. It broke above the simple moving average here at 8,000, which would have invalidated this entire drawing, right? As soon as you can see, it was around 8,081, and right from there we jumped up quite quickly. So there was a lot of, myself included, I'm baffled, I'm stunned, and it's one of the reasons why I actually am I'm not trading against Bitcoin right now. What we have been doing in the background with the private Bear Den members is taking advantage of the waves. So that brings us to Litecoin. So I want to take a look at Litecoin now because a bunch of the private Bear Den members were able to take profits from it on the short term, right? So here we go. Just the other day we saw a big spike up. Let's actually give us a bit more of a chart so we see a bit more prevalence. Okay, so when our first this month's newsletter at the beginning of June came out, had entry targets. Well, we had this actually in the background of the private den, but as part of the newsletter as well. Came out right around here at around 11,000 Satoshis for Litecoin. Now, when we had this breakout, most people don't sell the top here, right? But in the private Bear Den, I remember everyone watching everyone sell the top right around 17,000 and then start to look for re-entries. Now, what's positive about this is that if you sell the top you buy back into Bitcoin, you've effectively earned 13% more Bitcoin just by selling at the top and waiting, right? Now we get to see what Litecoin does. Litecoin's actually dropped into the cloud. It's become bearish for the moment, at least on the 4 hour. On the daily, we haven't broke below the cloud yet, but it looks like we might. We're going to test that out soon. And more importantly, on the weekly, there's something about Litecoin I think that's very, very interesting. Wow, look at that candle. Let's clean this chart up a little bit so I don't look like everything's just so colorful. We'll delete our entry targets here. Hopefully everyone found some. Okay, so here's the multi-year chart for Litecoin right now. The reason why I think this is important is because people always get excited about the dollar price for Litecoin when I'm really only interested in things versus Bitcoin's price. If Bitcoin's going to be the money, then everything else is in relationship to Bitcoin and its price. Therefore, what my main point of understanding is to understand the relationship of something over its lifetime in comparison with Bitcoin, not the US dollar. It's a hard thing to get used to, but I think that's what every smart analyst will take into account over the next 6 months to a year. It'll become very prevalent that the US dollar is not what you want to be charting against, because overall you're marking prices versus Bitcoin if you're trading in this ecosystem. So with Litecoin here, we've actually had a very, very strong point of resistance come through multiple times at around 17,000 Satoshis. We actually see a huge area of volume profile buildup. Now, if we were to ever break out of that, it would move very, very quickly. It's actually one of the reasons why we were looking for the cup and handle potential here that we had seen previously, and that's at least at this current moment on the weekly been invalidated due to Bitcoin's price movement. But this particular line here, there's not a whole lot of holding us back down if we were to break out of it. And as you can see, every time that we had in 2017 and 2018, tried to break out in Litecoin's price versus Bitcoin's price, it was not able to do so and declined very rapidly. Again, remember, it can take weeks for these things to climb up, and just in a matter of few days, it drops a lot of those percentage points. So for instance, if we take Litecoin from the breakout of the top of the bear claw here, which is quite noticeable in the mid of February, and then to its top, it took 49 days, where to then retrace almost the entire profit section there, it was 35 days. And then again on the bottom of these tweezers here, which we saw, another 30 days to the top of this candle, more or less. So Litecoin's price up and down over the course of just a month versus Bitcoin's price can often equal 20 to 30% gains or losses. This is one of the arbitrage opportunities that really exist in this space. It's not necessarily that I want to be trading Litecoin's price for US dollars, because if it's not keeping pace with Bitcoin, it doesn't make a fucking difference to me. The whole point is to end up with more Satoshis. So again, if it's on a decline, I don't want to be sitting in this because it's a heavily exposed asset, right? The exposure here on a very short time frame was approximately 40% downwards for 35 days, right? So the active trader that knows how to move in and out of a position without any emotion, without being married to this, is making huge gains. So I want to welcome one of the new teachers we have to the channel, Topo. He's actually in the private Bear Den. He's on fire. He's been a trader for don't ask how many years. It's just one of those questions where you can tell that there's a level of mastery involved with something. What is it? 2 hours a day for 10 years is around 10,000 hours. Is 13,000 actually, but anyways, it's besides the point. So my conjecture here with Litecoin is that if we were to see a breakout here, we would actually spike up to, we could spike up very, very quickly and very, very sharply into the around 0.05 or the 35 to 50,000 Satoshi mark, which would approximate around 100% gain in Bitcoin's terms. Now, in US dollar terms, that could be significantly higher. But look at the volume here between 2017 compared to where we are now. The volume is significantly lower. The volume in Litecoin between 2017 and 2018 was monstrous in comparison. Right now, what we see on the bottom of the chart is could basically be equated to a noise in the ecosystem. Again, and this is one of the things that I'm worried about, is that now that we have so few players in the system, are we actually seeing a real problem in liquidity instead of actual price price discovery, right? Whereas if I hold all the Bitcoin and I only sell it for $1 million, well, what's it worth? It's only worth $1 million if someone's willing to pay for it. So if you own most of it and you just continually put sell walls higher, you can essentially fluctuate the price. Now, this is what people start to call manipulation on either positive or the negative. Like, oh, whale came in and sold a bunch of Bitcoins and manipulation. Well, this is not manipulation so much as it's a regular market movement. It depends how much money you have. If you all of a sudden walk into the ecosystem and you've got $180 billion of assets, you can make this whole system shake, right? That's still something that's important to notice. There are banks around the world that have more in their liquidity pools than the entire crypto market. Actually, let's just take a look at what Bitcoin's at right now. We'll go to CoinGecko.com and check out the total market cap for Bitcoin at the moment, just because I haven't for the last little while. Bitcoin's total market cap is 159 billion, right? Okay, so Bitcoin's getting up there. Bitcoin's now sitting up there with some of the largest banks on the planet in terms of liquidity. Not the biggest banks, but some of the biggest banks. Anyways, back to this point with Litecoin, because I do kind of jump around a little bit. Because we've stayed in this area of consolidation, I actually think that Litecoin to Bitcoin's price is actually going to stay fairly relative. We may see Litecoin's price relative to Bitcoin move up to maybe 50,000 Satoshis at its high over the next little while. But that's only equivalent to 171% gain, right? Which is a lot. Don't get me wrong. That's a fucking enormous amount of profit. But what I'm trying to conjecture here is that because of the volatility you have from high to low here, 280 days of a 60% move versus Bitcoin's price, that if you are one who is capable of playing these markets, it is significantly smarter to be a swing trader than it is to be a hodler. This is one of the reasons why we opened the private bear den, is because the whole point of being a good trader is that you surround yourself with other good traders or other good investors or swing traders. I actually think day trading would probably ruin most people. So I don't suggest anyone day trade unless you know how to lose money. And I say that very specifically. So if you don't know how to lose money, you definitely don't belong in the day trading range, and probably not even in the swing trading range. Swing trading and day trading are for people that can afford to lose the money and still not get wrecked. Whereas some people, I think it's very noticeable by some of the ways people speak on the channel in the comments, with the FOMOing and the fudding and the Lambos and the direct Moon Boy talk. Even I was on the phone with Saifedean the other day, and just the general maturity of some of the market is still so adolescent. Maybe even that's being a little too credulous. But anyways, the point of this is, I think Litecoin has been in a very, very nice channel with Bitcoin's price for a long time. So if we actually zoom this down and we say, okay, we see a big breakout in Litecoin, I still think the biggest breakout in Litecoin we would see is up to around 0.05 Satoshis, not ever a 1/10 of a, well, maybe 1/10 of a Bitcoin up here, but we'd have to find a whole new form of market evaluation. That would put Bitcoin up at around $50 million, I think, if we were to ever see Litecoin at 1/10. So maybe that does happen. I mean, stranger things have happened. Isn't the entire bet of everything we've been doing in this space is basically betting on outliers to begin with. So betting on Litecoin is not a bad way to go. Again, I think that the volatility in the relationship between things like Bitcoin and Litecoin can be very valuable for people that know how to swing trade. Again, even just on the hourly chart, if we look back for what the bear traders were able to take in the bear den that sold the top, this represents a 15% increase in your Litecoin holdings if you rebuy back, even in this box range here, right, of 10%. I mean, a little lower. Look how we curve up beautifully with the 200 moving average here on the hour. Still falling down. We'll probably test the 14,000 Satoshi mark now that Bitcoin's kind of going on its upwards run. Anyways, that's it for Litecoin. I do want to reserve the rest of the show for answering your guys' thoughts and questions. And remember that this is all opinion. This is all simply for entertainment and educational purposes only. I've been trading in the crypto space for a few years. I've made money. I've lost money. Overall, I've come out ahead by enough. Now, I've done very well. The problem is I'm really good at spending money on business to try to make even more money, which is... it goes both ways. It's a gamble, right? This is why the VC funds usually go for, I'll aim at 10 businesses, and one of those businesses, once they work, pays off all 10 over the course of a 5 to 10 year time frame. It's like buckshot investing, and it works quite well. But you need to be able to make sure you don't get wrecked in that time frame, because if you go broke or bust in the time frame of trying to get to the next big sector, that's why this aggregate of probabilities over long durations of time, I think, is such an important factor to understand real wealth acquisition and accumulation. If it just came up all of a sudden, that means you got lucky. Doesn't necessarily mean you made a... I mean, yes, we made great decisions by investing in Bitcoin, but that's more like luck. It's not a series of hard-learned lessons to some degree it is. I mean, I was telling people to buy gold in 2007, and I didn't even have a portfolio then. I didn't even have offshore bank accounts yet. I just thought it was a brilliant idea because I could see that there is an inherent problem with printing fucking money all over the place. Anyways, some things you think seem obvious, aren't that obvious. Don't get wrecked. That could almost be a tagline for every good trader. So I'm going to quickly... let's see. I'm going to quickly drop this down for a sec here. I'm going to roll over and answer some of your guys' questions by looking at this screen over here. Okay. Let's take a look at your guys' questions. So you want me to take a look at gold and silver right now. I will first speak on the topic of gold and silver conceptually before I look at the chart. Conceptually speaking, I've owned gold and silver since 2000... I think we bought our first ounces of gold in 2007. Not much, just a little bit. I was hedging. All I knew was to keep doing things. I didn't necessarily know whether it would work out or if it wasn't like a retirement plan. It was just basically you should always hedge against outliers. It's one of the reasons why I fucking fall in love with Nassim Taleb, is because we have a lot in common. The other thing I think that's extremely important in the gold and silver market is to realize that they don't necessarily act the same way as money as they used to. The fungibility of gold is not as high as it once was. For instance, there's a great video that Mark Dice does where he goes out and offers kids the choice between a Hershey's chocolate bar and like a 10-ounce bar of silver, and they all pick the chocolate bar. Now, he does use some mental persuasion, obviously, to lead them into a little bit more of thinking the chocolate bar is the better way to go. But nonetheless, the point of this is fungibility means that people need to understand what it is that they're receiving to actually accept it and use it as money. I think, at least I hope that's what it means. Otherwise, I just made a total ass of myself. So let's type this in. Fungibility. In economics, the property of a good or commodity, individual units are essentially interchangeable. Okay, I got that part wrong. Fungibility means that you can cut it up into multiple pieces, so they're indistinguishable from one another. So if I give you 2 5s and a 10 and you give me a 20, it's fungible. So I did actually confuse that. I made a fool of myself. So what I was talking about being recognizable. Gold and silver aren't necessarily as recognizable as money as they once were, and that's a huge part of adoption in terms of money. Now, gold and silver's application in the industrial sense brings us to a whole other topic, and that, in this particular case, I will start to also look at its price. Now, if we go to the daily, on the weekly to, wow, very, very interesting pattern that we're seeing here on the, this is CFDs on gold. So this is CFD mean again? What, I totally I forget. I was just writing about these the other day. A contract for difference, right? So these are basically derivatives on gold. So first off, this isn't even an effectual gold market because these include futures and everything like all the nonsense that isn't in the reality of gold. No, and intrinsic value isn't what I'm thinking of. Intrinsic value doesn't exist. We've gone over that a few times in the show, and I'll probably go over that as we're looking at gold and silver here. But gold actually looks very, very interesting at this point for me. Not as a purchase, but just as a part of the whole story that's taking place right now. Let's actually bring this up here a little higher. It might give us a clear image. No, it doesn't. Cut right through looks best. Okay, I'm gonna actually remove this Fibonacci retracement too. It's not all that helpful right now. So we actually see an ascending triangle here taking place on gold, and this has been a very strong indicator. That used to be normally a continuation pattern. So if you're in a bearish market, an ascending triangle would generally be a continuation pattern. But we've seen that change lately. Now, again, one of the problems with gold is because we're measuring contract for differences or CFDs, we're measuring derivatives, which means that there's no real price discovery mechanism for gold based off what it's at and how much of it there is necessarily. Now, the Chinese have been lying about how much they own and da-da-da-da-da. It could go in either direction. So the point of this is gold really, we don't know how much of it there is. We've speculated, but we don't know. It's gold has almost as much speculation in it, I think, at this particular point as the cryptocurrency space in terms of its use as money. In terms of its use, oh, well, Jesus, I need to pour some. It's time to pour some apple juice, ladies and gentlemen. Caught a cold the other day, and I got a little bit of a dry throat. This is a long talk. Thank you all for joining us this evening. Top of the morning to you, or evening, or whatever time of the day it is. So, gold is actually in a very interesting spot right now in this ascending triangle. Normally these would break down, but they look like it's going to be breaking up. Whether it comes back down to test the EMAs, this is a big part of the question in the relationship to the dollar. Silver, I think, has a lot more room for upside. I think it's SLV. Is that what silver is? SLV. No, it's not. Oh, I'm in crypto. That's why. I don't even look at anything else. ICE Silver Shares Trust. Is the ICE Silver Shares Trust the actual commodity price? $13.91, it looks like it. Low, very low. Okay, so Litecoin, also known as silver, looks like it's going to have a lot more room for upside. Again, only data back to 2007, which isn't always as helpful. But we've hit pretty much rock bottom in terms of silver's price. So I think silver, in terms of like an investment, has a lot more room for upside. Not investment advice. Although, as you can see here, we've actually been on the weekly. We've been cuddling up right beneath the simple moving average, the 200 simple moving average, since 2016. 1, 2, 3. So we haven't been able to get above it, and the last time we couldn't even touch it. So silver has right off the get-go. I mean, silver could easily make a 10% jump up to $15 in no short time frame, and even that the fact that it didn't test it last time could put us in the more likely event of a test of 1641 up near the top 300 moving average. The reason this is important again is because the entire ecosystem is linked to this crazy worthless piece of shit that we know as the US dollar. Now, we could argue this day in and day out about why it's worthless or why it has value. I think people's fantasies and delusions are worthless. I actually prefer to live in the delusion of reality. Now, reality itself is a fucking fascinating thing, so I don't know why I want to try and shift it too much, but let's take a look at the US dollar here. Something that is pretty much totally a delusion. There's no real fundamental basis to the US dollar other than the fact that it's backed by what you could say war criminals or confidence. Now, confidence is mostly a con man's game. See, we broke out of... It's very interesting, but it does look like we broke out of this triangle here. We had a descending, not an ascending, but a descending triangle and a very strong line of support and resistance here at a 97 points for the dollar. Now, the reason this is important is because the dollar is really everything else that we relate things to price into, unless we're trading in Bitcoin, in which case everything else is Bitcoin because Bitcoin is real fucking money. Wait, hold on. You guys are saying silver's price is at 14 bucks. Did I? You know, I did go to the iShares contract. So it could be a dollar behind. I apologize if it's not actually physically deliverable silver's price, which would command a higher premium. So I do believe the iSilver's trust that we're looking at is also a CFD, which means it has futures. So if physical gold prices of silver is at 19 or 14.94, that would represent the difference, I believe, in the price of actually physical deliverability. Anyways, back to the topic of the crazy delusional reality that we live in, is that we believe everything is based off US dollars, and unless we're trading in the crypto world. This is again why I don't trade in US dollar prices, is because I believe Bitcoin offers a much significant, at least more relatable version of reality in terms of the way things are created one on top of another, and as in terms of like almost a consensus algorithm. Like for instance here, like if we all see that I put my phone up here, we can all have a consensus agreement that the fucking phone is up there, right? That's only good as consensus. We don't actually factually know that the phone even exists yet, like in terms of metaphysics. We don't even know. It could just be figments of our reality, and we live in the matrix in terms of like a video game to some degree. But the point of this is a fact from the side that in at least metaphysics says we live in a total delusional reality anyways, and it's all one big illusion, or what the Vedic mystics used to call the Maya, I believe, and like the illusion of reality. Then great. Bitcoin actually at least represents a form and functionality where that phone's going to stay there unless we move it, right? It's an immutable ledger. So now the phone is over here. I can't necessarily duplicate this phone, although that may even change in time too. I'm starting to really question how well we understand field theory and the entire world of matter to begin with, which goes to a whole nother conversation that in reality, why the fuck would you need Bitcoin and digital scarcity? We live in an infinite universe, so why don't we have infinite energy, which means everybody could have anything that they wanted because everything exists right now. That's a whole different topic. So aside, if you get rid of the fact that I don't want to live in a totally delusional reality because my brain just can't comprehend this chaos, like I'm still trying to piece it together in terms of like vague metaphysics, then Bitcoin becomes the stable unit of account, and the US dollar becomes the thing that could become hyperinflated. And this is also one of the reasons why I said back in 2016, when we first started this channel, we said that we thought the stock market was just going to keep going up. We had these two big blips. I took out a put on this one. I made a little bit of money and lost a little bit of money on that option because I thought the put option was going to go way fucking lower. I took a crazy way out of the money option in 2016 on the S&P 500. I think I lost. Well, anyways, I think my P&L was pretty much neutral. Anyway, but I remember after that, I said, oh shit, something I didn't realize is that it's the dollar that's degrading. The stock market's just going to keep going up. And I think that that's still the case. I think that under the heavy weight of the degradation of the dollar, we're going to see the stock market going up. And because people really don't understand that the inflation is taking place in the price of everyday things, like the fact that the new Mac cost, like Mac prices over the last 10 years. Let's use Mac for it's not going to be easy to find, is it? Anyways, I remember the first like G5 like professional Mac computer. It was like $1,300, and then the next one was like $2,500, and then last year the little fucking circle black trash can was like $3,000, and then now it's $6,000. This is what inflation looks like. Tech is supposed to get cheaper, ladies and gentlemen. It's not supposed to get more expensive. So if we know that tech by nature is deflationary and it should be getting cheaper all the time, why the fuck does it get more expensive? Oh, aha, the dollar is in total lunacy. And again, this is why I think the Bitcoin, this is why I think the Bitcoin and the crypto markets are so important, is because they really answer one of these really difficult issues around corruption and transparency as well as accountability. More and more so, the word accountability seems to pop to mind. That this, you have to keep an eye on everything. And the reason why this is important, again, I think, is that there has never been a moment in time where something doesn't go wrong. So just to calculate that something could go wrong in our space too, right? We could come crashing down to $1,200 in Bitcoin. Like if overnight, all of a sudden tomorrow, real estate prices started exploding, like the stock market started to decline, I would be very hard pressed to think that the Bitcoin market would go up, that the crypto market would go up. I think every asset would become extremely distressed, because every asset, and this comes back to the intrinsic part of the conversation, is not at all related to intrinsic fucking value. The only real value that something has in this life is your ability to survive with it. Outside of that, it's simply a privilege. Anyone that can ascertain this thing has more value than that thing is in a privileged mindset, because now you don't have to be thinking about purely survival. You can actually speculate to yourself whether you like the note from the guitar A or the note D compared to the note F. At that point, you're like, I actually prefer F sharp. It's a little sweeter or something. That's a privilege of having free time. Right? So intrinsic value outside of survival doesn't exist, because everything outside of survival is considered, in my mind, a privilege of a creative and intellectual society. So the further you go down the path of intellectually and creatively trying to decipher wealth, well, then the story of money starts to change entirely. But more importantly, it doesn't exist intrinsically. So Bitcoin doesn't have an intrinsic price. Gold doesn't have an intrinsic price. We know for a fact that if you're dying in the desert and I came up to you and you're like, hey, I got some gold, Bitcoin, silver, and cash, oil, whatever you want. We have all the commodities except for... But on this hand, I got food, shade, and water. Your survival commodities always have intrinsic value, because without them you will die. Now, without these other things, you may not necessarily die. There's a lot of parts of the world where you can become a sage. You can just sit on the side of the street and people are going to respect you for choosing that life and often take care of you quite well. And maybe you actually learn how to speak so affluently by sitting on the side of the road that you become massively wealthy, like Osho. Total side rant. But the point of this is, when it comes back down to the evaluation of a portfolio and really, I think, understanding the breakouts of any of these things, it's all happening in the minds of people, right? And also to bring us back to the point that this is all history being made. Like, this is super exciting. We broke into the $9,000 range for a minute. We saw a really strong candle. Now, if we want to dive into a little bit more, again, I haven't removed the bearish mentality from my mind yet. Maybe it's because I've been through market crashes before. Like I'm not going to be confident until I need to be confident. And even when I need to be confident, great, there's still a shit ton of room more for upside. And you've removed all the room for getting wrecked, and you can play forever. And that's really what I think. Again, it's why I bring up everyone who wants to play in the wealth acquisition space for a long time should definitely read the book Fooled by Randomness. I haven't read such a good book in a long time, aside from the previous book I was reading, The Letters of Seneca. And I think it's because a lot of these great minds start to really focus on the philosophy and the concept, because they're much more the deeper rooted aspects of what's taking place, right? Like, what good is the understanding of calculus if I don't know the concept of why? Like, the concept to me is actually significantly more valuable than the nits and the nitty gritty, because now I can apply this concept to many other areas of life. Anyways, let's take a look at a few more of your guys' questions here. I did go off on a fairly long tangent. I don't think I answered any questions other than the gold and silver ones. So that was approximately 15 minutes per question. I want to give a shout out to all of the Arcane Bear admins, all the Arcane Bear family, the Private Bear family. You guys make this whole space what it is. I'm really, really grateful to see how the culture of the community is to help one another. I've said this before, it's just me on the YouTube channel, but in the private Telegram channels, in the community Telegram channels, there's a lot of great people that are really supportive. They always help each other answer questions. We allow people to share stuff in there. If you haven't joined that community, links are down below. You can join our private bear den, but I really suggest that's only for the people. I'm going to sound kind of rude, but are happy to lose money. Because if you're not happy to lose money, you don't know how to play in this game. You might not make it very far here anyways. Again, the long-term game of acquisition of wealth, it's like it's better to be the dentist than the guy that won the lottery. It's just, there's a long-term process to this game. So if you do it overnight, that's about how long it will generally stay. Anyways, let's take a look at some of these questions, and I'm going to pour myself a little bit of a juicy drink here again. Hold on here. Let's give you my face back for a second. Oh, yeah, okay, good, I'm still here. Oh yeah, we're gonna have to change that. Anyways, it wasn't a private key, but not as valuable information, so I'm gonna have to change that. Anyways, we're going offline now because I'm gonna go switch something. None of y'all are faster than I am because you don't even know what they're for. But anyways, I did just leave. I'm going offline now. Have a good day. Don't ever do dumb shit like that.